Hello guys, so this is gold analysis. So if you're having problems with facing issues with analyzing the market, catching the right CRT in the market, then this video is for you. So I got two beautiful setups on gold yesterday and today, which I want to share with you guys on how I got it. So this is gold on the daily time frame. We can see gold has been bearish, forming a series of lower highs and lower low. As you can see, lower highs, lower low, lower high, lower low. And when it got to this price at the 3,900, it started rejecting. So we have to check below at the opposite end to see why the market is rejecting at this particular price. So if we look at this angle, we are going to see an order block right here. So we mark our order block, which has been, we can see multiple rejections on the daily time frame, indicating that what the market wants to possibly reverse from this place, right? So now we have multiple rejections and body closing above the key level. So we have to look for our CRT candle, which is very important, because when you plot the right CRT candle, you get the right target, right? So here is our CRT low, which is the range low, and this is the range high, because we are day traders and we want to just target the range for the day, and then we can hold the rest if the trend finally changes to an uptrend. But so far it has not yet broken above this high. You can see it has not yet broken above this high. So if it breaks above this high, then it will be a higher high, higher low, changing to an uptrend, right? So here is going to be a break of structure on the higher time frame, or market structure shifts on the higher time frame. So now this high is our CRT high, which is our nearest draw on liquidity. So after doing that, now we have to align our time frames correctly. So we have our CRT low here. This is candle range low, or CRT low. You can write it the way you want, CRT low, and this is our CRT high. This is our CRT high. All right, so now which time frame do we scale down to? The 1 hour time frame, to align these key levels. So now we have our ranges on the 1 hour time frame. So now this is the 1 hour time frame, right? This is the 1 hour time frame, and we have the liquidity sweep. So why are we using this? Because we want to see liquidity being collected on either side of the range. So if the low is being collected, it means there's higher chances that the market will be targeting the opposite side of the range. So now we have a CRT low here, which have been collected. So we have the first breakout, or the turtle soup here, and then the market pull back up, left this order block right here. So it left this order block right here, which is also known as model 1, as we can also call it, right? So for those of you who do not know model 1, this is a valid model 1 right here. If you trade CRT, then you will know what model 1 is. If you don't know, then you need to use your eyes more so you can see them. So now we've plotted our model 1 on the key level, and you can see how there is multiple rejections on that level. So we go down to the 15 minutes for our sniper entry. So how do we get our sniper entries? 15 minute again time. Okay, so this is 15 minutes, and you can see that the market has mitigated the order block at a key time, which is the London open, right? So when the London opened, the market swept the Asian low, and then it gave a valid confirmation here on that exact model 1 candle. So this is another model 1 here that reacted after the sweep of the Asian low. So at the close of this candle, we have our entry right here for a long position. Right here, stop loss below the low, below the order block, and then or below the last candle that swept, and we have our target, which is a draw on liquidity. You can either target 50% right here. For me, I targeted here 1:3, and I was out, and I was out. Then I waited for a retracement on the next move, but others who were active, they also caught the setup and they head onto full TP, which is the draw on liquidity on the higher time frame. So now if you can see, this is the draw on liquidity is the daily candle range. Like target is usually maybe the daily swing high, the 4 hour swing highs, or whatsoever. It all depends on you. You can use it the weekly, you can use a monthly. It depends on your style of trading, right? So but CRT really helps you to get the right directional bias of the market, and for you to know where the market is coming from, so you can also catch the moves following the market and its trend to where it's heading to. As you can see, it swept below and now it's moving to the target, right? So that was a good trade. I also shared the setup in my Telegram. You can see in the morning the setup played out and others also got the move, and also the same day BTC also had the same move and we caught it all together. So that is that for this. Also here, when the market retraces on the 1 hour time frame, you can see a clear breaker block entry confirmation, which we got at this level. My network is bad, oh my god. So here you can see a clear break of structure around this point. So this is where I got my second entry, around this point. And if you go to the 15-minute time frame where we got our entry, the breaker block mitigated and then it gave a bullish engulfing candle on the 1 hour time frame, which gave us our confirmation. So on the 15-minute time frame, time frame, you can see this is our breaker block. Here we have our breaker block around this level here, and we can see how the market tapped on it, and then it gave us what, a bullish engulfing candle that closed above the zone. So at the close of this candle, we get our confirmation for the buys. So we enter right there, stop loss below, and take profit at the swing high. Alright, so that is how we got our confirmations for these two trades, which I shared in my Telegram channel. So guys, if you had issues with identifying your right CRT candle, I believe this video has helped you. So thank you.